So let me guess, you're looking for ways in which you're going to avoid paying taxes again like you did last year. You're probably feeling that sting from last year's tax returns. You're probably sitting at home right now thinking, geez, my accountant might be getting old. There's not a whole lot of strategies that he's given me lately. Maybe it's time for me to do some research to figure out if there's something I can do to take control of my situation. And so now you're here, clicking on a video, giving you 5 steps to how you're going to save money in 2022 on your tax returns. And it is pretty easy if you know what you're doing. But there will be those who choose not to do anything about their situation. There will be those who realize that it's time to take action. So let me show you how. Let's dive in. All right, guys, for those that are new to my channel, my name is Karlton Dennis. I am a licensed enrolled agent. An enrolled agent is completely different than a CPA. I hold one of the highest designations at the IRS, and my job is to help everyday taxpayers leverage the tax code to the fullest extent by educating them on the laws that they can operate within. And once you understand the laws, you understand the fun that you can have within the laws. And that's the part that makes taxes so fun and interesting to me. Many people approach me and say, Karlton, you make taxes seem very sexy. You sound like you're having a lot of fun doing this. You're absolutely right. This is no different than any other game I played for my entire life. I was a football athlete when I grew up. I gave up football right after college. And guess what? I had to figure out a new game. And this game of building wealth is pretty fun to me because I get to use the tax code to do it. And I've also watched other entrepreneurs, other real estate investors use the exact same tax code to have the fun that I'm having. And I love it. You know what I also love? I love people that want to join in on the game. I will love people that want to know how the game works, how the game is being played. And by the way, who is killing it at the game and who sucks at this game? Because I don't want to be somebody that's mediocre when it comes to this game of life, when it comes to this game of building wealth, when it comes to this game of paying the least amount of taxes possible. How many of you guys believe that you can pay the least amount of taxes possible? How many of you are watching this right now and thinking, man, I don't think I've ever had a year in which I paid less than $10,000 in taxes. There's a lot of 6-figure and 7-figure entrepreneurs I work with that were surprised to pay less than $10,000 in taxes this past year. Maybe that'll be you. Maybe it won't. It might come down to the decisions that you decide to make. It might come down to these 5 steps that I'm about to share with you that you may or may not implement for yourself and with your tax accountant. It's going to come down to you implementing these processes. So let's discuss them. Step number 1, you need to make the decision, not anyone else, that you're going to have 2 professionals working with you. 1, a tax accountant, and 2, a tax professional. You see, when you go into this game of trying to reduce your tax bill, you'll come to realize that there are different types of accountants and professionals out there. There are accountants that are really good at filing the tax return, and there are tax professionals who are really good at saving money on taxes for people. I want you to have both on your team. Someone who you know and trust that can help you file your returns ethically, on time, and with all of your numbers reported, but also have somebody that you feel like you can communicate to 365 days out of the year that understands your business, that understands your family situation, that understands where you're trying to go with investments and with finances to be able to guide you, to help you leverage the tax code to the fullest extent. You see, a tax professional is someone who interprets the law. So when they get on the phone with you, they understand that you don't know the law in which the way they know it. So they're going to coach you on what to do with the law so you can use the law to your advantage. Whereas a tax accountant knows the rules in filing your return. When you hand over your information to your tax accountant, either the information you're handing over abides by the rules or it doesn't abide by the rules, and they're going to file the return following suit. With your tax accountant, there may not be a whole lot of conversations around how to reduce your tax bill, rather conversations on what information you should be providing to complete the tax return. That's compliance. Whereas with your tax professional, there will be nothing but conversations around how you're spending your money, how your family operation is set up, whether or not you love where you live, whether or not you would like to move, whether or not you're thinking about investing more money into the market or getting into real estate, and whether or not it makes sense to invest more money into the market or get into real estate. You see, your tax professional is somebody who's kind of like your best friend, someone who you can bounce ideas off of, but they're really like bumper lanes at a bowling alley, pushing you in the right direction, the direction that you know you need to go. They hold you accountable. They understand the law and they're able to interpret it in a way in which you're able to understand, and they're able to guide you. So when it comes time for you to file your tax return with your tax accountant, you're not sitting there looking silly, not knowing what to say, not knowing what to ask for, but simply turning over documents to complete your tax returns online. Step number 1 to reducing your tax bill in 2022 is having 2 professionals your tax accountant, and a tax professional that will help you leverage the tax codes to the fullest extent. Step number 2, and probably obvious enough, to reduce your tax bill, you are going to need to convert all personal expenses that you currently have to business expenses in the right way. Many business owners haven't solved this problem yet, which is why they schedule consultations with my tax office. I want you to know that your personal expenses, such as your car, your cell phone, your rent, should be converted over to business and should be done the right way. When you look online, there's not a whole lot of help that you will find. This is when you partner with your tax professional during the down months of April to December to figure out how you can allocate these personal items that you're spending your money on each and every day over to business items. Leveraging code section 162A will help you do this. This code section is the key to how you convert everyday personal expenses to business expenses by linking those expenses to the pursuit of income. This code section requires that the expenses are ordinary. This code section requires that these expenses are necessary, and this code section requires that these expenses are reasonable to you, the business owner in the pursuit of income. You, the business owner, gets to decide what is ordinary, necessary, reasonable to your business in the pursuit of income, which means you have the power to convert your personal expenses to business expenses if you can link them to the pursuit of income. I'm encouraging you to do this right now if you're watching this video, to look at all the personal expenses that you have, populating your Excel sheets, populating your bank statements. And I want you to convert these personal expenses that you know can be linked to business and get them converted over to business by leveraging code section 162A. All right, let's jump into number 3. The number 3 way in which you're going to reduce your taxes in 2022 is by making sure you implement all of your strategies by December 31st. 99% of all tax strategies that I leverage in my office with my tax team are implemented and need to be implemented prior to December 31st. December 31st is the end date. It's the end of the road. It's the last point in which we can make a meaningful impact on your tax returns. But too often, business owners, investors wait until the months of January, February, March, and April in the following year in their tax accountant's office, not even with their professional, to try to figure out how they can reduce their tax bill. They've made 2 mistakes. 1, they didn't get a tax professional in time. And 2, they're showing up too late. When you show up in the months of January, February, March, and April, that's like showing up to the emergency room on a helicopter. They're literally just going to bandage whatever wound and bleeding that you currently have. There's not going to be a whole lot of operation going on that's going to be meaningful to save your life. They're just going to try to do whatever they possibly can to keep you breathing. If you're somebody that's just breathing every single year with your taxes because you don't have a plan and you're barely keeping your head above water, what do you think is going to happen this year if you don't implement a tax professional? What do you think is going to happen this year if you don't implement your strategies prior to December 31st? You see, most business owners need to buy vehicles, buy equipment, leverage tax deferral strategies, implement real estate strategies prior to December 31st. But if you don't even know what strategies you should be implementing, let alone how to implement them, they're not going to get implemented by December 31st. And when you go into your tax accountant's office, they're not going to be able to help you because they're going to be looking for your tax documents to file your tax returns. I don't want any person to be sitting there scratching their head wondering what they could have done differently when I'm telling you what you can do differently right now. This moment that you see this video gives you the opportunity to act with the time you have left in the year. December 31st, when the ball drops in New York, it's a wonderful time for me because I'm sitting back with all my customers who have already gotten their tax plans delivered, and I get to sit back and enjoy watching that ball drop in New York, knowing that no customer is going to come to me in January, February, March, or April with a problem because I've already educated them on how to get to a solution prior to December 31st. This deadline will always be the date in which I will have all of the tax strategies implemented in my office. Unless you're somebody that owns an investment property and you want to do a cost segregation study, we won't do any other strategy other than the cost segregation study past December 31st, which means you're going to have to be a real estate investor, and not every single taxpayer is one. So if you're someone that's watching this right now, I want you to circle December 31st on your calendar. That's the date in which all strategies need to be implemented. And really, you might want to circle December 20th because Christmas and New Year's Eve, your accountants, maybe even your tax professionals may not be working during the holidays, which means you're going to need to partner with someone to learn, get educated, and implement the strategies prior to December 31st in confidence. All right, guys, let's jump into number 4. How are we going to reduce our taxes? We need to implement both tax deduction strategies and tax deferral strategies. Let me explain. Most entrepreneurs are only implementing tax deduction strategies. They're spending money to reduce the amount of money they're going to be taxed on, which is completely fine. But you can take a spearheaded approach at going for tax deduction strategies, just as you could take a spearheaded approach at going for tax deferral strategies. Tax deferral strategies means that you're going to defer the taxes that you would normally pay right now on the money that you have coming your way. Some tax deferral strategies include looking at setting up your own retirement accounts, such as solo 401ks, such as SEPs, self-employed pension plans, or even looking into defined benefit plans. These tax deferral vehicles are ways in which you can avoid giving money to the government, have money grow for you, tax deferred, and now you're in a position where you can go ahead and pull that money out later on when you have a vehicle that can help you offset the income. Because right now, many of you may not have a vehicle that can help you offset tax. Maybe many of you haven't invested into something that gives you the ability to reduce your taxable income while still making and showing income. If you're in this situation, wouldn't it make more sense to defer the money that you would give to Uncle Sam until you do have a situation where you can offset that money when you decide to pull it out of your retirement accounts later? The answer might be yes for you. And if you're somebody that's watching this right now, you have a choice to make. You might leverage all the amount of tax deduction strategies that you qualify for, but still be in a place where you're going to owe taxes. It might make more sense for you to start considering looking at tax deferral strategies in combination with your tax deduction strategies. It may make sense for you to solo 401k if you're somebody that doesn't believe in investing into stocks, and have that money that you put into your retirement account that's giving you a tax deduction rolled right back into rental real estate, since you can self-direct your retirement account for real estate investing. This gives the entrepreneur control. It gives them control of their money that would have gone to Uncle Sam. It gives them control of their own retirement accounts, and it gives them the ability to buy time with the tax deferral to be able to implement a system that will help them reduce taxes when they pull that money later on in life. Everybody will approach that age where the time will come where you'll have to dip into your retirement accounts, or the time will come where you'll be required to distribute money from your retirement accounts. And guess what? If it's not a Roth, that money is going to be taxed. But rather than having that money be taxed right now, you can defer that money and have it grow, giving you a tax deduction in real time as you work on developing the instrument, the tool that will help you reduce your tax liability long term. My goal is to help you reduce your tax liability long term. I don't want to just put a Band-Aid over your wound. I want to perform surgery and give you the real solution that you need to run this race. And that's exactly what type of tax professional I am. I'm the type of tax professional that's going to wear my coat. I'm going to wear my cape. I'm going to save the day by teaching you not only how to be wealthy right now, but how to be wealthy in the future with your taxes. It comes down to the information you absorb. It comes down to following people who have done it before. And I've been blessed enough to be in the position that I'm in to watch other entrepreneurs do it the right way. Watch my mother do it the right way with entrepreneurs that she's coached. And now I'm coaching hundreds, if not thousands of entrepreneurs on how to do it as well. How we can get to a place of building wealth strategically is looking at both tax deduction strategies and tax deferral strategies as a part of our wealth building. All right, guys, let's jump into number 5 and probably my favorite way to reduce overall taxes. The number one way to reduce overall taxes year over year is to implement a tax eliminator strategy. A tax eliminator strategy is a tool that sits on your tax return year over year that helps you eliminate taxes. For a lot of my entrepreneurs, it's real estate. And I know it's weird to say that, but a lot of entrepreneurs who come to me don't own real estate yet. So I'm coaching them on why real estate might be more important to them than actually their operational businesses. You see, when I get to a point where the entrepreneur understands what I'm coaching them on, they start to realize that real estate can help them grow their business in the way in which they want it to grow. You see, I'm all about helping you grow your e-commerce business, your day trading business, your real estate business, your trucking business, whatever business that you do have. I'm all for growing it, but I want to help you grow it faster. And the fastest way I can help you grow that business is by giving you more of your cash that you've earned. Rather than having you write checks to Uncle Sam every single year in exorbitant amounts, I'd rather have you put that money into real estate, which is my tax eliminator tool that allows for me to help you offset your taxable income from your business, even though you're positive income. You see, this is a concept right here that many entrepreneurs don't dive into. They're so focused on making money. They're so focused on just writing things off. But when you start becoming focused on building wealth, you realize that you don't have to spend so much time trying to look for things to write off. You just spend time buying rental real estate and leverage the losses from real estate to offset your S Corp or your LLC income or any personal income you might have that could be W-2, 1099 stock related. You see, real estate is a tax eliminator vehicle. The wealthy have been playing with this vehicle for years. We both know that. We're not silly here. We're not naive. But why is this vehicle the one that they choose to use? It's because of depreciation. You see, depreciation is the key. It's the gold that real estate investors are looking for. They realize, hey, once I use the government's money, once I use the bank's money to go buy an investment property, guess what? I get to write off the entire building, not 10% of it, since I put a 10% down payment, not 20% because I put a 20% down payment. I'm writing off 100% of the building. And if I get hooked up with a tax professional like Karlton, he's probably going to write off half of the whole building for me in the first year. And now I got a nice loss on my tax return to offset my S Corp income, offset my LLC income, offset my W-2 income. You're watching this right now saying, that's interesting, Karlton. That's an interesting play. You see, all of these things that I just gave you are tax plays. But how are you going to implement these tax plays if you haven't followed step number 1, which is deciding that you need a CPA and you need a tax professional? Your tax professionals should have energy, enthusiasm on trying to save you money. It should be like they wake up with their hair lit on fire, ready to save people money on taxes. And your tax professional should be someone you can talk to and communicate with. Your tax accountant should wake up feeling enthusiastic to file a tax return. They should be so enthusiastic about getting your information so that they can complete that return so they don't have to worry about you contacting them asking where that tax return is. Because we all been there. Hey, CPA, how are we doing on my returns? Anything else you need? I'm still working on it. You want that tax return done quickly, and so does your CPA. Your tax professional wants you to save money, though. Your tax professional wants you to save money. I realize that just like many of my taxpayers, I'm out there working hard. I'm putting in the hours. Nobody's here with me. I'm doing the whole struggle routine, the hustle routine, just like you are. But I want you to know that I feel you. I feel you when you're sitting down at your desk and you're recording content. I feel you when you're on that phone call with that upset client. I feel you when you're being your own customer support person, your own marketer, your own salesperson. I feel you. I even feel you when you're like, dude, I work so hard and I still got to pay this much in taxes. I feel that person. I wanted to do something for that person. I wanted to position myself to help out that person. And that's what I've done. I've chosen to become a tax professional to help out the entrepreneur that feels like they shouldn't be paying so much in taxes. I want to solve that problem because I know this problem over here of filing the return, this has to get done with or without me. I'm going to have a lot of tax accountants that can solve this problem. But this problem over here, this requires a cape. Okay, this requires somebody to wear a superhero outfit and come through and save the day. I like being a hero. I remember being a hero on the football field. It felt good making tackles, coming up and being the person that saved the day, getting the interception. I miss that feeling. Guess what? I got it back. I got it back in what I'm doing. I'm a tax professional. I'm here to save you on your taxes. I'm here to save you money. I'm here to save you money in integrity. I'm here to help you leverage the tax law in integrity. I'm here to help you unlock your greatest part of yourself, which is being able to build wealth strategically. If you are somebody that's watching this video right now and you're like, whoa, this was some information, and you should feel encouraged. I have a whole library of other additional information that's going to help you save money on taxes. But what I want you to do something right now. I want you to like, comment on this video. Let me know how I did. Let me know if it's something that you feel like it's providing you value. And what I want you to do as well is take the opportunity to click on the free consultation link below. My team is a team of tax professionals, and I have a CPA accounting team to file tax returns to. We're over 40 people deep in my firm. Okay, we're dense right now. And guess what? We are here to work with people who understand that it's important to take action on their taxes. I think that's you. I look forward to working with you, but if not, I look forward to seeing you in the next video. Go ahead and click the subscribe button if you haven't already, and I'll tune back in next week. Thank you.